Inflation creeps down, but it's not clear if it'll be enough to convince the Reserve Bank. Nine Entertainment suffers a big profit blow as the TV ad market flops. And China's biggest retailer, JD.com, plans a major share buyback amid economic slowdown fears. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 29th of August, 2024. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
Adam, the main story this morning, inflation is continuing its slowdown with the monthly headline consumer price index dropping to 3.5% in the year to July. This has been a much anticipated measure given many other countries are looking at rate cuts.
That's right, Michael. In June, the measure was at 3.8%, but now at 3.5%, that's in the year to July, it is heading in the right direction. However, it still is a bit higher than the market consensus of 3.4%. Housing, food and non-alcoholic beverages, clothing and footwear, and alcohol and tobacco were the most important contributors to that lift. Fruit and vegetables were up, while housing and related expenses were also a significant contributor, and that's even though the government's electricity subsidies helped those charges. Federal Treasurer Jim Chalmers said it is a welcome progress in the fight against inflation. It is the final monthly data before the RBA meets in late September, though most economists have not changed their expectations for rates based on this data. February 2025 remains the date most expect the central bank to cut. Of course, the RBA will look through the headline data, as we know, Michael, to instead focus on underlying inflation, which strips out those one-off government support and some subsidy measures. Interestingly, new research from Roy Morgan shows that more than 1.6 million mortgage holders were at risk of mortgage stress in July. That is a big number, even though it's a slight decrease from the June figures. Now, those stage 3 tax cuts are helping to put more space between workers' incomes and their debts. But clearly, though, lots of people will still be looking for rate relief in the months ahead to help take more of that pressure off.
Yeah, with so many people under pressure, Adam, it probably goes without saying that it must be hitting the retail sector pretty hard.
It's true, Michael. Deloitte Access Economics actually published a report late last night that now estimates that Australia has been in a retail recession for 18 months. And from now until Christmas, it's still looking like it's going to be brutal for shop owners in the retail market. Amongst this, there was one bit of good news. This final period will be short and shallow on their estimates, with 2025 and 2026 indicating a recovery and a return to growth. And that is welcome news, I'm sure. The forecasts show real retail turnover will be lifting from 0.3% this year to 1.5% for the next 2 years. In the meantime, they're expecting retail businesses to focus heavily on cost control and occasional discounting and investing in technology to improve efficiencies and customer experience. We'll get the official retail data this Friday, and that'll give us more insights into what's happening. And as a reminder for bargain hunters, Michael, and I know this will interest you, the Black Friday online sales are scheduled for Friday, 29 November, and they'll end on Cyber Monday, the 2nd of December.
I love that you're giving us, a 2.5 month heads up on this, just so that we can start planning our shopping around this so far out.
I know it's not even September yet, but I'm already thinking of Christmas.
Yeah, it's smart. Plan ahead. Adam, taking a look at local markets, the S&P ASX 200 closed flat yesterday at 8,071 points with a surprise late uplift, reversing a day that was spent mainly in the red. Consumer staples and financials were among the best performers and helped drive what really was an afternoon resurgence. Resources, communication services, energy, metals and mining all slumped throughout the day.
Well, that's right, Michael. And then the broader market, as you said, just crawled out of the red towards the end of the afternoon. Woodside Energy was down 1.2%, with Santos dropping 0.7%. Fortescue Metals fell 1%. Inflation and consumer spending have been major themes this earnings season. Bed linen and soft furnishings retailer Adairs said foot traffic had fallen sharply and its net profit after tax dropped 17.8%. Their shares were down more than 5%. A big surprise came from women's wear retailer City Chic, which reported earnings before interest, tax, depreciation and amortization. That's that snappy acronym, Michael, EBITDA. They had a loss of 8.4 million, and that was nearly a 50% improvement on the previous financial year, and its shares actually went up by double digits on the news. Tabcorp was also a poor performer over the day. It was down 15% after flagging in its earnings that challenging conditions would continue, and we'll discuss that one a bit more shortly.
Adam, you mentioned Woodside Energy before, and today's interview, which comes up after the show, is actually a chat with Woodside CEO Meg O'Neill. It is a great interview. It comes to us courtesy of our friends at AusBiz. We've been working with them to put together a series of interviews with business leaders. AusBiz is Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy, startups. Of course, it is free to sign up at ausbiz.com.au. But the interview is so interesting because Meg O'Neill just talks right across the range of projects, and they are some big projects that Woodside has at the moment, including the $30 billion Browse development north of Broome, which was rejected on environmental grounds, including the threat to the pygmy blue whale. There's just a whole lot in this interview. It is a fascinating insight into an oil and gas producer, including climate change and sustainability, all of that kind of thing. So well worth a listen after the show. International markets. A quick look here. Internationally, Adam, at the moment, it's all about NVIDIA. The US markets are waiting on its second quarter results, which are due this morning. These results will be seen really as a major indicator of how optimistic investors should or should not be about new tech like AI. So the stakes are obviously pretty high. We will take a closer look at that this afternoon in the afternoon report.
That's right, Michael. And according to Bloomberg, this is compared with news from the Bank of America, whose clients have been pulling cash from US stocks for the first time in 3 weeks. The most significant sector experiencing the outflow was, in fact, technology. Now, interestingly, though, for technology ETFs, it's a different story. That asset had the biggest inflows of capital. Meanwhile, in China, bottled water producer Nongfu Spring has had a hard time with double-digit share price falls. That was following a sharp slowdown in profit growth for its first half results. It's blaming competition, a backlash, and malicious defamation. CNBC reports that nationalist Chinese internet users are accusing the business of using pictures of Japanese religious buildings on its green tea labels and have launched a boycott. Nongfu says the imagery is based on Chinese temples. Imagine trying to deal with that one.
God.
On a slightly different note, it's worth keeping an eye on grain futures, which have risen in Chicago due to pretty poor weather in the US Farm Belt, which is threatening crop conditions for soybeans, corn and wheat. Hot weather without enough rainfall is behind those concerns about crop yields.
Adam, we have a fair bit to get through today. There's been a lot of business news around in the last 24 hours. We'll be back in a moment with the rest of the day's business news. Adam Green's leader, Adam Bandt, is trying to be the Robin Hood of the business world. He used a National Press Club address yesterday to relaunch his plans to slug corporations with big new taxes.
Yeah, Michael, he's called it the Big Corporations Package in a bid to tackle what he is describing as excessive profits from large companies. Now, this includes a proposed 40% tax on coal and mining businesses, and that was similar to Kevin Rudd's resource super profit tax. He's also proposing a petroleum resource rent tax and a 40% tax on so-called excessive profits for companies whose turnover is $100 million and over. Now, he's had his plan costed by the Parliamentary Budget Office, and it reckons that all these components together will generate $514 billion extra for the federal purse over 10 years. Now, the Henry Tax Review some time ago recommended a 40% resource super profit tax, so there is some heritage there. Employer Association AI Group CEO Ines Willox called the Greens' approach a naive cash grab that would gouge businesses, hurt investors and damage job growth prospects. The Business Council said it would drive jobs and businesses away, as Australia would have the highest tax rate in the OECD. So, Michael, as you can see, there's quite the war of words over tax here.
Oh, yeah, there sure is. And Adam Bandt was also pushed on the issue of Green Senator Max Chandler Mather, who's been blasted by Workplace Relations Minister Murray Watt after he spoke at a CFMEU rally that had attendees holding up signs likening the Prime Minister to a Nazi.
Yes. So, Michael, you get the feeling that there's some electioneering going on towards the forthcoming federal election. The minister described Chandler Mather's appearance at the Brisbane rally as very, very disturbing on ABC Radio National. The CFMEU was forced into administration by the Albanese government last week, and that was following media reporting of links between the union and organised crime and also allegations of corruption. Construction workers across the country went on strike in protest. Chandler Mather said in his speech that it was an attack on every worker in this country as it set a precedent for future governments on how to seize control of trade unions or civil society associations.
Okay, turning away from politics now and into an area, Adam, where you have a great deal of expertise. We're talking about the media here. Nine Entertainment's profits plummeted 22% to $216.4 million, with revenues down 3% amid a weak television advertising market. Almost a third of Nine's revenue is now coming from subscriptions and licensing when excluding property listing site domains. So advertising remains a crucial component.
Yeah, that's right, Michael. And for its part, Nine thinks the TV market will experience a positive trend going forward, with the Paris 2024 Olympic Games putting a bit of wind back in its sails. That has largely been behind a 10% lift. But without these games, it would be looking at low to mid single digit decline. Now, Nine is cutting back $100 million from its cost base over the 2024 and 2025 financial years. A fully franked dividend of 4.5 cents a share has been announced, and that is 8.5 cents for the full year.
Adam, grocery giant Woolworths net profit fell 0.6% over the last financial year, though sales increased 5.6%, with the Australian supermarket sector behind most of the increase.
Yeah, Michael, the New Zealand supermarkets dragged down the overall result with a $1.5 billion impairment. The markets were pretty happy, though, overall, with Woolies giving shareholders a higher than anticipated 40-cent special dividend after selling a 5% stake in Endeavour Group. That was on top of a 57-cent final dividend. CEO Brad Banducci said sales for the first 2 months of the current financial year were up 3%. That's some good news. Some of that was due to modest price increases. Prices are still going up rather than going down at big grocery stores, but there's also some growth in terms of item sales, that's sales volume. By comparison, Coles estimated a 3.7% lift for the same period. Big W, which Woolworths owns, is having less success with flat sales and discounting needed to attract customers to spend.
Now, Adam, it might feel like lockdowns were a very long time ago, but obviously their effects have been long-lasting for plenty of businesses. Among them, probably some of the hardest hit would have been the travel sector. It does seem that there has finally been a turnaround, though, with Flight Centre earnings hitting a fresh record. This is good news.
Yeah, it is good news, Michael, and I still get a bit of a twitch when I think of lockdowns. This news shows they've officially surpassed pre-COVID levels. Airfares have been moderating and travel demand is holding up pretty well. One of the sectors driving this is cashed-up older Australians, some of whom are benefiting from higher interest rates and a solid investment market. There were $23.74 billion worth of transactions in the year to June 30, and that was bigger than the 2019 results. Underlying profit was smack in the middle of guidance at $320 million. Flight Centre has announced a final dividend of 30 cents a share that is fully franked.
Cashed up older Australians. Seems a good time to mention that Sean is having a bit of a holiday. At the moment,
nice one.
He has jetted off overseas. The worst part is he's not even going to hear this.
Well, there might be some reports that get to him, though, Michael. We are at risk.
Yeah. Oh, you know what? I'm pretty comfortable with it. I'd probably say it to his face if he was here as well.
You would.
But he's enjoying a well-earned break. He's probably actually drinking a cocktail right now, which is odd considering the time of morning that it is. But you know what? He's on holidays, so there is no judgment here. Adam, turning to international news. Now, I mentioned this one at the top of the show. China's biggest retailer, JD.com, is planning to buy back up to $5 billion worth of its own shares amid major concerns about a decline in consumer purchasing.
Yeah, Michael, this massive retailer had pushed well through its June quarter profit estimates, but has been struggling with investor fears about the local retail market, particularly after rival Temu was a big miss on revenue expectations. This marks its second share buyback for 2024, having gone through a US $3 billion round previously announced in March. And it's a theme we're seeing from big digital retailers in the region. If you cast your mind back to February, you'll remember that Alibaba announced a US $25 billion share buyback. We've been talking plenty on Fear and Greed about the slowdown in China, which has included a lot of upheaval in the sluggish property market. JD.com will continue to be a litmus test, with Walmart selling off its multi-billion-dollar holding in the business earlier in August to pursue its own interests in China. China's economic success has significant implications for companies in Australia too, with the Reserve Bank recently putting a question mark over our biggest trading partner. We know it's a key source of uncertainty for our current economic outlook.
Adam, Donald Trump faces a new federal indictment. It's an interesting situation, this one, because it's the same four charges brought against him last year, but following a ruling that former presidents largely are immune from criminal prosecution, this time the charges are focused on him as a political candidate looking to be re-elected.
Yeah, Michael, those charges are accusations that he allegedly took part in a conspiracy to block the certification of his election defeat to Joe Biden. Fake claims of voter fraud are at the heart of this case, and Reuters has reported that the updated indictment relies on key testimony and evidence from witnesses outside of the government, including ex-Arizona House Speaker Rusty Bowers. It no longer includes the earlier allegations that he tried to pressure the US Justice Department to overturn his loss. So this is going to be interesting to see if Kamala Harris and running mate Tim Walz are asked about the case at their first interview, which will be with CNN on Friday, Australian time.
Yeah, it'd be fascinating. Just speaking of US politics, Meta CEO Mark Zuckerberg revealed this week that he had been pressured into censoring COVID-related content on Facebook. In a letter to the US House of Representatives Judiciary Committee, he said that this happened during the pandemic and he regretted not saying something about the intervention earlier.
Yeah, Michael, the content was fascinating. The platform was under pressure during the height of the virus due to alleged misinformation being spread on it, particularly about vaccines. Zuckerberg now says he was pressured into censorship and would push back if asked to do the same thing again.
And over in Europe, Adam, UK Prime Minister Keir Starmer is in Germany in a bid to, in his words, reset relations across the region and turn a corner on Brexit.
It is such interesting phrasing, isn't it, Michael? He is visiting Germany to start talks on a new cooperation treaty. The agreement is expected to cover energy security, technology, science and trade opportunities and includes improving market access. However, the treaty might not come about until early 2025, so it's all very early in the discussions, despite a defence agreement already being negotiated and due to be finalised in the next few months. Keir Starmer is then heading to Paris to talk to French President Emmanuel Macron. And this is all part of Starmer's attempt to get trading with his neighbours again. Now, if he pulls this off, benefits are expected for a range of industries, including the art scene. British Labor is trying to reduce border checks on food products, but also reduce paperwork for artists on tour and make it easier for citizens to access specific jobs. As an aside, it's good timing for his Parisian adventures, as the BBC reports that he'll get to attend the opening ceremony of the Paralympics while he's there.
Just on the UK-German relations, Adam, did you see the story recently about the German warship that was kind of cruising up the Thames?
Oh, I did.
Going into London, and they were blasting the Imperial March, Darth Vader's theme song from Star Wars, because they can play it across the big speakers as they went up the river. And so it raised a few eyebrows, as you can imagine. But and I love that Germany's Navy had to come out and actually just clarify there was no deeper message here in the choice. The commander of the ship just loves Star Wars. This is that's the thing. But it certainly got some traction on social media, that this image of this massive ship.
Yeah, imagine if you're just walking along the Thames and you hear something and turn and see this giant boat cruising along and the theme music playing.
Yep.
What a bizarre scene.
Yeah. And I love the fact that they get to choose. The commander gets to pick whatever music they play. And he's clearly just decided, yep, this is what I'm going to do. So, like, he's speaking our language because you and I both love Star Wars. So I get why he's done it. But hey, maybe not. If you're trying to avoid a diplomatic incident, maybe not the best choice.
Maybe also, Mike, if you're going to do anything, go big.
Yeah, exactly. Well said. Okay, up next is the Fear and Greed Daily interview. Today's guest is Woodside CEO Meg O'Neill. It is a fantastic interview courtesy of our friends at Ausbiz. Well worth a listen. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Adam.
Thank you, Michael.
It is Thursday, the 29th of August, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.